John Domenico.
We're ready to educate people.
It's about the good, the bad, and the ugly. No bullshit. The real deal.
And welcome to another episode of The Real Deal. My name is Naz.
I'm Nick.
And who do we have today, Nick?
And today we have Mr. Gary Fooks.
Big deal.
CEO of 812 Mortgages, Part 2.
Big deal. First guy on our podcast to come back for a second time. That must mean we like you, or I don't know. What does it mean, Gary?
Well, listen, that's all I know is when I look at the other podcasts or the other episodes, you're always dressed up, and every time I come in here, you're wearing pajamas. So, mind you have a jacket on today, so maybe I'm supposed to take solace in that. So,
you know what? I feel comfortable with you.
Okay, good.
I feel comfortable with you. So, Gary, obviously we love having you on the podcast.
I love being here.
Thank you.
Yeah.
But also, we know that you got some big stuff that's coming out soon, if it's not out yet.
Let's backtrack a bit, just for
Yeah.
the viewers and listeners who maybe didn't watch the previous podcast. So, Gary,
Somebody didn't watch the previous podcast?
I hope they did.
Come
But
on.
for those who didn't, they'll likely
I don't want
go
them to
back
watch
and
this
watch
one
it after
either.
this one. Come on, let's be real here. Last podcast we talked with Gary about just taking it back to the basics on mortgages, and basically everything you need to know about them, qualifications, and all that good stuff. And today, back to you, Naz.
Gary's got some big stuff that he's going to talk about. We'll segue you into it.
Sure.
So essentially what we wanted to talk about was the biggest challenges that Canadians face. I would say the average Canadian faces when purchasing a property, right? Which would be
Down payment.
And first of all, why, right? Like, why is it that so many Canadians say, I don't have the 20% that majority of people need?
Yeah, so good question. I mean, it's not 20% in all cases. In
Yes.
fact, you can buy for as little as 5%.
Right.
But a couple reasons. Number one is you've seen what's happening with real estate prices in Canada,
Yeah.
especially in Toronto or other major centers. They're skyrocketing. So that 5% is harder and harder to get. And as soon as you get to $1 million, based on the new rules as of a few years ago, it is 20%. Right. So as soon as you get to $1 million, it's 20% or more. So for a lot of people, that's a hard number to hit. I'll give you a quick stat. National Bank of Canada did a research study. If you make just under $200,000 a year and you save 10% of your annual income to use as a down payment, it'll take you 26 and a half years to save the 20% for a down payment.
That's crazy.
Right? And that's assuming in 26 and a half years from now, we're still living on Earth, because we could be doing real estate. We could be doing this podcast on Mars. And B, that house prices in 26 and a half years will be the same that they are today, which
Hopefully house prices are cheaper on Mars.
I
doubt
know.
it.
I know. You want to live with Elon, you're going to pay a premium. So, and I hear that gas is expensive.
Gas
to
is
get
expensive
up there, so,
over there, yeah. That's crazy to me. That stat is ridiculous, right?
Yeah.
Especially, and that's also saying that no hiccups happen.
Yeah.
Where that money needs to be used for something else.
Or that COVID-4 doesn't hit and you lose your job and now you
Yeah.
don't qualify. I mean, there's always a lot of potential factors that could pop up that life gets in the way and you weren't expecting.
Yeah,
Right.
and from our understanding, I mean, we're still learning about what you came to talk about, but from our understanding, you're the first in Canada to have a solution to this problem,
Yeah,
right?
we're very excited.
Big news.
Yeah,
Huge
we've
news.
launched a mortgage product that will allow people to solve that problem.
So what are the current solutions besides your new product? What are
Yeah.
the current solutions for getting help?
Sure. So traditionally, you kind of have two options when you lack down payment, right? You go to the bank of mom and dad, right? And they kind of hook you up with a gift.
Yeah.
And 31% of Canadians don't have the bank of mom and dad. And in fact, we're seeing situations now where the bank of mom and dad helped someone a couple years ago, and for whatever reason, maybe that relationship that they helped hasn't panned out.
Yeah.
And now the bank of mom and dad is asking for that money back, right? But hey, you signed a gift letter. For all accounts, it was a gift. So we're seeing that happen today. So that's been kind of the big one. The second one is traditionally you get a co-signer, right? You get someone who's buying the property with you, maybe a family member, a friend. And those have been kind of the only two solutions. There is a product that exists where you can borrow against your credit cards. Not recommending
That's such
it.
a bad
Yeah,
idea.
it's a bad
Oh
idea.
my
It does
God.
exist. So you asked me it's my job always to tell people what exists, but definitely don't recommend it.
What a bad idea.
No, doesn't make sense to go to high interest debt to come up with your down
Yeah,
payment.
it's
If
like
you're doing
19
that,
to 20%,
or higher now,
26%,
more now.
30%
Exactly. So that's
of
been kind of the
interest.
ways.
Like, well, that's so stupid.
Yeah.
You know, I remember reading. I don't know if it's true. It was on Narcity on Instagram, but it's something like majority of parents are gifting. I think the average is like $70,000
Yeah.
to the average buyer.
Yeah.
And then I read all the comments, and they were like, "I wish my mom and dad could."
Oh,
do
for
it.
sure, for sure. Because if you think about it, let's say the average home price is 800,000.
Yes.
The 5% rule says you got to put up 5% on the first 500,000, and then 10% on the next amount, right? So if we take that number of 800,000, that's a $55,000 down payment, and then you got your closing costs, your land transfer tax. So 70 to 80,000 would be
It's about right.
Be about right.
Yeah.
So Gary, with these solutions and I guess this new product that is coming to market, or it's here already?
It's here.
It's here.
Here. We've closed some business. Pipeline's growing.
It's like
exponentially.
Godzilla.
Yeah.
It's here. All you
Yeah.
see is the water tremble
Yeah,
as it
tearing.
gets closer.
Yeah, it's tearing.
So what is this product called, and tell us a little bit about it.
Yeah, so we've had the pleasure to work with a company that's launched at what's called a co-equity product. We're the only mortgage brokerage in Canada that has the exclusive relationship to service that product
Huge.
Wow.
from the lender side.
Huge.
So what that is high level. In the past, based on the B20 rules, the Canadian laws, you couldn't have a company be a partner with you on a home, right?
Right.
Because how do you underwrite a company on a mortgage?
You can't.
You can't, right? So now we actually have a product where a company can be a co-equity partner. So they're not on title, they're not on the mortgage, but they have an agreement with you, and they're going to come up with their portion to get you to 20%. So high level, you got to have at least 5% of the purchase price. You can have as much as 15%, and whatever the difference is, they will come on and be a partner with you and potentially share in the upside of that property based on the percentage of the amount of money that you're putting in and they're putting in.
So in detail, right? Because that's kind of the short
Yep.
the short
Yep.
version of it, right?
Yep.
What does that mean for the average buyer? So let's say I got 15% down or whatever numbers you're going to make it
Yeah.
easy, 10% down. What are those numbers like? What does that mean for the buyer? How long do they have to like what does it entail, right?
So let's use kind of Toronto. It's one of the 7 regions that's been launched. Let's use Toronto as an example.
Mm-hmm.
When you want to buy a starter home, it's what, maybe 30, 40 million maybe these days? No, let's use $1 million, right? Because that's a round number that everybody can relate to.
Right.
The second you get to $1 million, you need 20%. That's
Yes.
the Canadian law.
Yeah.
So let's say you have 100,000, right? The co-equity partner will come up with the other 100,000. So
Mm-hmm.
now theoretically you each put in 50% of the down payment. So you each share in 50% of the upside.
Okay.
Okay. So you buy that house, they will also contribute towards the land transfer tax.
Huge.
Again, their portion.
Which is huge, especially
Massive.
in Toronto, 14%
Massive.
land
Yeah.
transfer tax
Yeah.
in Toronto. 14%.
And they'll contribute to their share of the property taxes. Right?
Every
That's
year?
Every year.
Every year.
Every year.
Wow.
It
So
is
if
a
it's
true
50-50,
partnership. Yeah, it's
they
a true partnership.
Oh.
Right? So let's use an example. If you're going to rent a home for $1 million today, and let's use a 5-year term because I think that's a good one, especially for most people getting into their first home. Usually it's for about 5 years. If you're going to rent $1 million home today, at minimum you're paying $3,000, right?
Yep,
Maybe
yep,
even more.
Yep.
5 years of $3,000 a month rental payments, you're going to blow away $180,000. That's money out of your pocket.
So
You're not
much
getting
money,
that back.
Man, that's
right?
so much money.
It's a lot.
It's crazy to think
a lot.
about.
That's
over 5
so
years.
much
Yeah.
money, man.
It's a lot of future suits that you can buy to be on these podcasts so that you can come prepared next time.
Shots fired.
Right? But now you take a $3,000 a month payment for a mortgage, right? And let's say even half of that comes back in principal because of the interest, half interest, half principal. Over 5 years, that's $90,000. So you save the 180, you earn 90 back in principal. That's a $270,000 swing, right? Let's say that home goes up even 20% in 5 years, right? 4% a year, very reasonable.
Very reasonable. I
Right?
think we average 7, so that's very conservative.
So 50% of the upside, because it went up 200,000, is $100,000. So 100,000 you gained in equity, you got $90,000 back in principal. That's 190,000. So that's almost 200,000 that you can now go and sell your house and use that 200,000 and buy your own home, right? So that's a game changer.
That is a game changer because you go and buy another $1 million home,
It's all yours.
it's all yours. Or alternatively, you go refinance the property, you take that $200,000 out,
Yep.
and you go buy yourself an income property.
Yep.
So that allows people the opportunity people who currently are in the mindset of, well, I'll never be able to afford a property.
Yep.
I'm never going to be able to buy
Yep.
real estate, are now able to think to themselves, well, now I can own 2 properties. I can own multiple properties across the GTA.
Yeah.
Right? That's life changing.
Yeah, it's
I would say.
massive.
That changes somebody's life forever.
Yeah, it's massive. So the only things for people to know is you have to be buying a home to live in it, right?
Yes.
This isn't
Yeah.
for rental properties. There's the 7 major regions in Ontario, right? Toronto, Durham, et cetera. The minimum purchase price is 550,000. The maximum is 2.5 million.
Oh, okay.
Right, because if you want to live in the beaches, you
Yeah,
gotta spend that kind
you're
of
not
money,
spending $1 million bucks in the
Yeah.
beaches.
And it has to be a regular type of house, so a condo town.
It can't be like a duplex.
semi-detached.
It can't be
correct.
anything like that. Okay.
Correct, right? And aside from that, you have to debt service the mortgage. So if you need an $800,000 mortgage in that
Mm-hmm.
example, you would have to traditionally qualify for $800,000 mortgage. You have to do the same thing today.
Okay.
Right? So massive opportunity. There's a lot of people out there.
Oh my God. Yeah.
And especially what's happening with real estate right now, where everyone's, potentially thinking there could be a little bit of a dip. This is a perfect opportunity
To
for
buy
those
real
people that
estate.
were like, hey, I couldn't buy because it was a seller's market and I was worried about multiple offers.
Yep.
You've solved the down payment gap. Potentially we're getting into a buyer's market. Huge opportunity to take advantage
Massive.
so you don't miss the next swing.
Massive, because it will swing. And I think people
History
think
tells
like,
us that it
well,
will.
it always does, right?
Yeah.
Because look at the States. The States is a prime example. 2008 was a nightmare for the United States of America. And now they have multiple offers on properties in places that were obliterated by the 2008 crisis.
Yep.
Like Florida, you could buy a home for $12,000 in 2008.
Yep.
Okay. Now they got multiple offers on
Yep.
properties.
Yep.
Right. So no market is forever. Like even our market now, it's not forever. I mean, not that it's going to go back down and you're going to buy a 3,000 square foot home for $800,000.
Yeah.
It's not happening.
Yeah.
Right. But in the same token, it's not going to be multiple offers. You're overpaying by $500,000 anymore. No, it's going to be worth what it's worth. And it's an opportunity for you to get in, buy what you need to buy, and now watch it appreciate and grow. And even if it's a 50% equity stake, who cares?
Yeah.
Right?
Sure.
Who cares, guys? That's money that you don't have.
That's money that you would have thrown away in rental payments.
Yeah.
Right?
Yeah, because you can't save 20% on the average lifestyle.
Yeah, it's
It's
unrealistic.
impossible.
For purchasing a home in any major city
Yeah.
today. Yeah, it's very
It's unrealistic. So, and especially we always tell people get in now because you wait, right? And you're waiting for that detached and you're saving for that detached. By the time you can afford that detached, that 20% doesn't work for you anymore.
And think about it like this.
You
You have very, very smart people, right, who've analyzed the market and realized this is the best way for them to put an investment vehicle out there to help Canadian families achieve their dream of home ownership, which fulfills that need. And then the second is to bet on real estate in the Canadian market long term.
Long term.
So that alone should tell you, smart people betting on Canadian real estate.
Real estate's always a long term investment, right? Like you don't buy real estate to get out in a year.
Yeah.
It's just going to cost you money.
And then on top of that, who is today's buyer?
Yep.
The millennials, the Gen Zs, typically, good earning income, IT professionals, et cetera. They make the money, they just don't have the down payment. We have 1.3 million immigrants coming into Canada over the next 3 years, typically lack the credit history, the income history to qualify for a traditional bank mortgage. So there's just massive opportunity out there. So for the realtors that are watching this show, the tens of thousands, the hundred thousands of them watching and learning, think about your Rolodex. Think about all those clients you had to say no to in the last, year, 2 years because of down payment.
Everybody's going to start going through their CRM now.
Yeah.
Everybody.
Yeah.
Everybody.
Yeah.
So who is the average, who's the ideal candidate for this? I know we talked a little bit about criteria, but
Sure.
who should be jumping all over this?
Yeah. So very simple, right? Your household income, rough numbers. Again, there's more details involved, but rough numbers, whatever your household income, multiply that by 5.
Yep.
That's the mortgage amount you're going to qualify for.
Right.
Right.
Yeah.
So if you do make $200,000 a year, household income, as we talked about, that's about $1 million mortgage. You have to have at least 5% of the purchase price, right? Those are the two kind of main criteria. And then you have to be in one of the 7 main regions. And again, a $550 minimum purchase price to $2.5 million max. So high level, that's what we're looking at.
So it's primarily, I guess, this program is primarily for people who can't necessarily afford the down payment.
Correct. Where they wouldn't have a problem paying a mortgage,
Yeah.
but it's just getting over that down payment hurdle. That's the
So then
ideal
you have
situation.
to get, so you qualify for the co-equity program and then you have to qualify for your traditional mortgage.
Yeah, so we do the pre-approval first to know that you're going to qualify for the mortgage before we send you into getting started for the program, right?
What you're doing is possibly saving our city from becoming a New York market. And what I mean by that is New York is a rent dominant marketplace because you can't afford to buy real estate.
Yeah.
Right? Whether you don't have the down payment or whatever have you, it's a rent dominant marketplace. And without something like this, that's where I project our what's happening. That's what I see happening.
Yeah, look,
Right?
I definitely don't want to take the credit for being the one to do it.
No, you
I'm
did it.
definitely helping in the
No, you
process,
did it.
just to be clear. And it's a pleasure to do that. For me, the satisfaction and fulfillment of knowing that I helped a family get into their first home, that's something you can never take away. But on that note, renters market, you guys know better than me. You're seeing developers that have sold out 4 or 5 years ago, and the buildings coming up in a year, sending back those deposits saying, hey, we decided we're not going to build and instead turn this into a rental property.
Mm-hmm.
It's happening all the time.
It's going to happen more
We've
here.
seen a lot here now. Yeah.
It's really common across Canada. It hasn't been as big here, but it's going to start. Like, I think builders are going to start just building buildings and renting them because there's more money to be made in keeping a building.
Yeah.
Right? There's a lot more money to be made.
Absolutely.
Which, I mean, and that's the New York thing.
Look,
that's the New York
at the
thing,
end
right?
Of the day,
Yeah.
right? It's a business.
Yep. Yeah. In terms of I forgot what I was going to say now. In terms of rent, right, and like what we were talking about, rentals and things of that nature, I think what people also need to understand. And before we get into that, you said that you're not responsible for it. Well, Elon Musk didn't build the electric car. He didn't invent the electric car. But everybody knows Elon Musk as the electric car guy.
Yeah, no, look, I appreciate
See what I'm
that.
saying?
We're always looking for ways to help people, right? At the
Absolutely.
end of the day, right? I built my own personal business, and our company. It's built on relationships, right?
Yep.
We don't. I think we talked about this last time. Mortgages for us are not a transaction.
Yeah.
Transactions are buying your coffee or something, at the store.
Buying
For
your
us,
car.
The relationship that you build with people for us is the number one thing.
Yep.
So yeah, definitely looking forward to building more.
And I think a lot of people appreciate that. But at the end of the day, like what I'm trying to get at with that is, although you might not have been the guy to create it, you'll be the one remembered for pioneering it. Does that make sense?
Sure.
So that's kind of what we're getting at here. And that's one of the big reasons that we're so happy to have you on this, is because now we're going to be the people who pioneered, the guy who pioneered
we're all
it and
messengers,
advertise it, right? Like
we're all messengers, right? So if we can keep spreading the message and helping more people, we'll
absolutely.
take that all day long.
Absolutely. So where do they, just before you ask your question, where do they find out about this?
Same as last time, reach out to 812.mortgage, right?
Dot
That's our
mortgage.
website. So the number 8, the word 12, the ending is .mortgage, so it replaces the
Dot
.com or
mortgage.
.ca.
Mortgage.
And then, we have a contact form, we have an application link. Just reach out, co-equity product, co-equity program, down payment program, whatever you want to call it. There's no perfect term. We'll have one of our senior mortgage strategists reach out. They'll talk to you. They'll help you get pre-approved, and they'll hold your hand through the process.
So Gary, question now. So this product was created and you're sort of, I guess, distributing it, or?
Yeah, we helped. I mean, there's a company that put this product together.
Yeah.
Amazing group of people, really saw the innovation to help Canadian families get it, achieve that dream of home ownership. We helped, get involved from the mortgage side, because you still need a mortgage to fund that product. And again, traditionally, the Canadian lenders, based on the Canadian laws, weren't able to fund that kind of mortgage. So we found a solution that works, that's compliant, that's active. We've closed already 3 files, so 3 families have gotten to their first home.
Wow.
So yeah, that's
So is that
our
the main
position.
reason why no one else is offering this product?
Yeah, the hurdles. There's a lot of hurdles to get involved.
A lot of red tape.
CMHC has tried to launch a program. There was a shared equity program.
Yeah, with the government, right?
Yeah, it had some challenges. It was a little bit, a little bit complex for the average person. So it didn't really get a lot of traction. It didn't really get off the ground.
It's a lot of taxpayers' dollars too, the way CMHC wanted to do it, right? Because it was a government invested program, wasn't it?
It was, but CMHC is a crown corporation.
Yeah.
Right? But
so that ends up coming out of tax dollars, I would assume.
Yeah, it's investments.
Yeah. So tax dollars.
Investments.
But that's another reason. It's just a lot of red tape. But you guys are, like you said, I wouldn't call you guys, like, you're not a private company. You are, but
no, we're not.
Right.
We're
but
national brokerage.
National brokerage. That's why I wouldn't say that. But it's not a government-run product.
No.
It's run by people who buy real estate in this country and understand real estate in this country and really do want to help out, right? That's huge. That goes a long way, man.
Yeah.
That's going to help a lot of people.
And this is national, Gary?
Right now, it's limited to Ontario and kind of the 7 main regions, right?
Okay.
So Durham, Oshawa, Toronto.
So GTA.
Yeah, GTA and outskirts. This product will become available and expand throughout other provinces as time goes on.
Yep.
But like any, new product, disruptor in the space.
You got to test the waters.
Got to test the waters.
You got to test the waters.
Yeah.
Make sure it's not cold before you jump in.
Yeah.
Right. I know me when the water's cold. I sink like a rock. I swim like a rock.
The goal
once
is
the
to
water's
never
cold.
leave any Canadian family behind. So over time, that's the end goal.
No, that's great, right?
Yeah.
That's huge.
No, this is definitely big news. I mean, it's the average person these days you speak with. I mean, that's one of the main reasons they can't afford that down payment.
So many people we
get
speak
into
to.
the market.
So many people we speak to.
Yeah.
And it's so unfortunate, right? Like how many people we talk to, do you rent or do you own? And they rent, and okay, why aren't you buying a property? Well, I can't afford it. But what does afford it mean?
Yeah.
Does afford it mean you can't get a mortgage because of other reasons, or does afford it mean like I don't have any money to put towards it?
Yeah.
Right? Because that's a lot of like, I know I can already think off the top of my head how many people I'm gonna start referring to the program.
We
right?
get a lot of people that say, "Hey, I'm already paying $3,000 a month in rent. I can easily afford a $3,000 a month mortgage." And traditionally, we talked about this last time. The answer is it doesn't work that way.
It doesn't, but this
Now it potentially could. Right?
Yeah, yeah, and that's great, So, anything after 15%, how does that work? Like if
Yeah,
I
so
have like 18.
Yeah, so you can't. It is capped right now.
They gotta
as
have
little
skin
as
in the game.
5, as much as 15.
Okay.
Because it has to be a 20% down payment. That's kind of the sweet spot. So you would just keep that extra 3%. Maybe buy some more jackets and suits. And
I have suits.
And Gary, you can pay off your equity partner anytime.
yeah. So any time within 10 years, it could be the day after. Like if you win the lottery the next day, you can pay them out. And the question is, well, how you pay them out? So there's a few options. An appraisal is done. So obviously everybody knows what the fair market value is. So you can sell your home, right? You can refinance, or you can just, if you come into some money, you could actually pay them out. So you have up to 10 years to do that. And any one of those options would work.
Okay, that's good news. Before like we end or anything, there's been a change in the marketplace, in the real estate market, and it has a lot to do with the interest rates.
Yeah.
That are slowly increasing,
Yep.
but they're increasing nonetheless.
With inflation.
There's a lot of factors that are playing into this, obviously.
Yeah. What are your thoughts on the way interest rates are increasing? What are they trying to control? Things of that nature. Because I think a lot of people are afraid. Like as soon as that first interest rate increase happened, the market like almost immediately shifted. The real estate market. Homes that were selling with multiple offers, now it's like, oh, we don't got any offers on offer date.
Yeah.
Right?
Yeah.
Do you have any thoughts on that?
Yeah, listen, my crystal ball cracked a long time ago.
Yeah.
So
no kidding. Mine too.
So what
Mine
can
too.
I tell you? Look, I'm going to tell you the things that anybody should tell you when they're asking you questions on the future of real estate. I'm going to tell you cyclically, long term, you're always going to make money.
Of course.
There's a lot of different factors and variables that go into trying to cool down a market, right?
Yes.
We've obviously had a very hot market, and it is smart to kind of get in and make sure that it doesn't run away from us.
Mm-hmm.
But again, there's so many factors. Like when COVID hit, everyone's like, "Oh, we're gonna have a 35% drop, and the market's gonna crash." And the market not only went up within the first year,
Like 100%,
10%, but then it started up 20-30% year over year.
Yeah,
right?
I think like we said, February was 20% in a month.
I don't,
almost per month. Yeah.
Listen. If you were my brother and you came and you asked me the same question,
thought I was.
we're getting close. Getting close.
He just prefers you in a tux. That's all.
Yeah. Next
My
time.
well-dressed brother. If you were my well-dressed brother,
All right. Next
hopefully
time.
that makes you feel better.
Next time.
I would say there's never the perfect time because nobody knows.
I agree.
And if you have the money and you need to own a home and want to own a home,
Do it.
And you have the availability to do it, do it.
And that's
Because
why this is
nobody
important.
knows what tomorrow brings.
And that's why this program is so important, because it's exactly that. Listen, you now have the ability to own property.
Massive.
So own property.
Yeah. And if everyone's saying now with all these changes and now this whole, foreign owner situations coming in, if we're now going to be in a buyer's market, the more reason to do that. Because
I actually
again,
think
timing is perfect.
I think preventing foreign investors from purchasing in this country is such a mistake. In this province,
we're a
think
free
it's
market, right?
big
I mean,
mistake.
but again, the government has to do things that make sense for Canadians first.
They're
before
only
anybody
limiting
else,
it.
Absolutely.
right?
Aren't they only limiting it for 2 years?
Yeah, but they're trying to cool our market down. But with that, there's risk of ruining our real estate market as well, right?
Look,
because they were the big push in 2016. That was the push, right?
It's a tough task to tackle, right?
Oh, yeah,
I wouldn't want to be the one to figure that part out.
There's no fair side to it, right?
It's tough.
Somebody's going to take a beating either way you spin it, right? So, and right now I think there's more buyers than sellers in the country, so it's better they don't take a beating.
So let's think about that, because this same question was asked when COVID hit, right? Exactly. What do you think is going to happen, right? And especially, we work with a lot of investors, et cetera. And my answer at the time was, maybe there'll be a 5% drop. I didn't expect it to be more. I didn't realize it would be a gain. Right?
Yeah.
Full disclosure.
Yeah. No.
Yeah.
Who
But
could?
Why,
Who could?
Right. But why did I say a 5% drop? Why was I adamant that it's not going to drop 10, 20, 30%? Before COVID hit, the market was on fire just like it was recently.
Yep.
And there was, hundreds of thousands of buyers looking to buy. Those buyers didn't disappear.
Nope.
They didn't say, you know what, I'm not going to own a home, I'm just going to rent. They're still there, right? So think about what's happened recently. Yes, maybe the market's cooling a little bit or has in the last week or two, but all those buyers that were buyers before haven't gone.
Yeah, absolutely.
We're getting 1.2 million immigrants in the next 3 years. And there's a massive shortage of housing already. Developers are holding back. You know, Nick, you work with developers. They're holding back inventory because they don't know what their labor costs are going to be in 2 years from now. They don't know what their product costs going to be. So on those factors, we're already short. There's no signs that there's going to be massive
influx
of
property,
property available. So again, you're asking me if I were to take a guess, and it is a guess. I'd say no more than a 5% drop in the short term.
Yeah, I mean, and that's reasonable to me. I think that's fair. I think prices aren't going to go anywhere.
Yeah, I think we just kind of hover, up 5, down 5.
We'll just
stabilize.
Yeah. And I think if the government gets it to stabilize, I think that's a W. Like I think that's a win in their books because, and I tell this to everybody, you're never going back to the pricing from 12 years ago. You're not buying a detached 2-car garage house in Vaughan for $800,000. So get over it. That's number one. Number two, I always tell them, put yourself in a seller's shoes. Your neighbor last month just got $1.6 million. What are you going to take?
Yeah. So here's the way I look at it short term. The way I look at it short term is no different than a margin call, right? So if anybody's investing out there and they've been in the stock market, they understand what a margin call is. Anybody who needed to sell for any reason, they bought another property, they were going to sell anyways because maybe they couldn't carry the home. You're going to see that influx of sales happen very quickly, and they're going to start, drop prices will drop a little bit, just like in a margin call, right? Everybody who has to get out is going to get out.
Going to get out. Yep.
But once that little phase passes and everybody starts picking up those properties at what they feel is a discount, it's going to come right back to where it is today. And again, I think it'll be stable.
It has no choice.
Yeah.
It has no choice, but
because people who don't need to sell are not going to sell. It's just the people that need to sell, just like that margin call, that you're going to see those prices be affected today.
I agree. And that's it, isn't it?
Yeah.
Right? Like people
so
who don't need to sell,
call.
don't need to sell. So take advantage of the margin call. Go get yourself a co-equity loan. Go buy real estate.
It's not a loan. Remember, it's
product.
not a loan.
Sorry, product.
Very
go get
important.
yourself a co-equity product and go buy some real estate.
Yeah, get into your first home.
Go make some money.
Be a Canadian homeowner.
Get in the market.
I don't know what people think. I don't know how people think. Like, listen, a regular 9-to-5 job is not going to make you financially free.
Well, it can.
In most cases.
It can, but in most cases,
in most cases. What will make you financially free is investing your money so it works for you in the long term.
So what would be interesting is, could we recommend any good realtors that can help these clients?
No.
Get a home through this program?
Have you seen the way I'm dressed?
I was just going to say, I know a couple good, well-dressed ones, maybe.
Yeah, no. So what I would tell people on that end is if your realtor doesn't have every trick in the book to help you buy real estate, get a new realtor.
It's a good idea.
That's it.
It's a good idea. Do what
That's
you've
what
done,
I would
get
say.
what you've gotten.
That's
Guess
it.
we won't be using Naz anymore.
Nope. Nope. I'm trying to limit myself to only the select few. No, I'm just kidding. I'm just joking. I'm just joking. But yeah, no, seriously, if your realtor doesn't have every trick in the book to get you a home when it seems like you can't get a home, it's the wrong realtor.
Yeah, and look, you guys were innovative enough to understand the second we spoke about this, like, hey, we got to talk about this, right?
Yeah, yeah. 100%.
And this is what it's about. It's about people in the industry that are always looking for ways to help others. You do that, you're always going to come out on top.
Well, we always say that people who solve the most problems make the most money.
Yeah.
Right? And you have to be solution focused, and then the money will come in any business
money
you
follows
do.
Success.
Always.
You're good at what you do, the money's going to
So
follow.
just fix those problems for people. Find out what's wrong. And in your case, in this case that we talked about, it's the biggest problem for most Canadians that are going to buy a home is down payment.
Yeah.
So you've found a way now that solves one of the biggest problems in Canadian home buyer for Canadian home buyers, whether you're mostly first times, but still for anybody really that doesn't have 20% down.
And at the end of the day, it's also a win-win for all parties involved.
Everybody.
With that
I agree.
transaction.
Everybody.
I agree.
From the actual prospect to the realtor to the mortgage brokerage, everybody.
Does one more thing, Gary? Does it work for pre-con?
Well,
As long as I'm going to live in it.
Again, if it's coming up to the closing, right?
Okay.
You can buy it today, be like, hey, my closing's in 2 years from now.
Yeah. So what this does for everybody, right? What else it does is for those that don't know what pre-construction is something where, it's not built yet. So you're able to buy something, let's say it's going to close in a year, right? And it allows you to purchase property, build wealth, build appreciation, pull the money out, refinance, pay off the co-equity product, and go buy yourself a second property. That's a no-brainer.
Yeah.
That's wealth. That's freedom. what needs to start happening, especially for first-time home buyers, because it's hard enough to buy a first home, let alone a second house.
Yeah.
Right? Yeah, that's great. That's great. Round of applause for Gary.
And 812.
And
On
812
episode number 8.
on 8.
Yeah, episode
812.
812. Wow.
Episode 812.
Wasn't planned.
And no, it wasn't planned.
No.
It wasn't planned.
It's amazing how these.
Perfect.
You know that we got licensed on August 12th?
Did you?
Yeah. Our regulator.
812.
You know what? We're going to hook you up. We're going to give you your license
Wow.
on August 12th.
On 812.
Wow, so that's where the name originated from.
No, the name came in before, but I'm guessing that they wanted to hold us back until August.
Where did the name originate?
We spoke about this.
No, not last
Yeah,
time.
we
No,
did.
not where it came from.
Really?
Yeah.
I think I told you.
No.
Well, 7-Eleven was taken. So like we all like
We
7-Eleven.
definitely did speak about this.
We did it?
last time.
Oh, okay.
No, we're gonna roll back the
I
old
would've-
podcast.
Okay.
I would have
Yeah.
laughed my head
Yeah,
off.
we
if
all
that
like
was
7-Eleven as kids, so it's like, how do we take it a
Oh,
step
that's
up?
too funny.
No, look. Do you want to know?
Yeah.
You do.
No, really.
Look, when you're building a company in the financial services space, you want to be very careful that you don't infringe on any other names or
Right.
people have beliefs that you're similar. So you need something unique, and then getting a unique website URL
Is even
address
harder.
to match your name is even harder, right? So we really sat back and said, well, we'll make us unique. So we big believer in numbers. So 8 represents infinity, so infinite number of opportunities.
Wow.
Rounds is like rounds in a fight, so infinite rounds of financing. We never want to stop helping clients get financing to get into their home, and that was 812. The ending .mortgage, Google had just started releasing some of the other domain endings.
Right.
So we were pretty much the first company in Canada, if not the world, that adopted the
812.
.mortgage ending right from the beginning.
The
So it
.mortgage.
was never
That's
.com, it
so
was never
cool.
.ca, it was .mortgage.
That's
from
so
day one.
cool. It also makes it easy to remember,
Yeah.
right? 812
Yeah.
.mortgage.
Yeah.
Number 8,
The word 12.
the word 12
Dot
.mortgage.
Yeah.
Not mortgages. .mortgage.
Even though you guys say that every time. But
I know.
apologize.
.mortgage.
812.mortgage.
And yeah, you have anything else?
that's the real deal.
That's the real deal.
That is the real deal
That's
here.
the real deal.
This is the real deal.
This is the real deal. This is
Game
like
changer.
for real.
game changer in the industry.
That's
It's,
a disruptor, right?
yeah.
Like that's huge.
but it gives more and more people an opportunity to purchase real estate.
Yeah. Yeah. I don't know how many times, like, I don't know. This is one of those things where you just can't stress it enough. Like, you got to drill it into people's heads.
Look, you're
can
gonna
buy
have the
real estate.
naysayers. Oh, but I don't own the home fully myself. And
So
so when
what?
you really stop and think about it, it's a game changer. It's a
It
win. Like
is.
you said, Nick, it's a win-win-win for everybody.
But for those naysayers, okay, rent.
Yeah.
It's not your home.
Yeah.
You're renting now. You're paying
But
a
you know what they're
mortgage, and
gonna
guess
say?
what? It's not your
You know
home.
what they're gonna say? But I don't want to rent.
So this is what I always say to people. Now you have 3 options. Before you had 2 options,
Yeah.
right? Really, if you don't have the deposit, the down payment, you have 1 option.
Yeah.
So if this isn't the program for you and you're renting and you don't have a down payment, rent. Pay somebody else's mortgage, and guess what you're doing? You're paying a mortgage and it's not your house anyway.
Yep.
Right?
Yep.
And somebody else owns the property.
Yep.
So 50% of something is better than 100% of nothing. So now you have 3 options.
100%.
Right? You somehow win the lottery or rob a bank and you get your down payment.
Win the lottery.
Win the lottery. Yeah, sorry. Or rob a bank. So
I'm sure you guys got me on here.
you get your
Do I need my lawyer to watch this before you post it?
so you get your deposit. You rent forever and you try and save until you can get your deposit. Like you said, on $1 million property, it takes somebody how many years?
So the National Bank of Canada study said if you make $196,000 a year and you save 10%, which is just shy of 20 grand, it'll take you 26.5 years to come up.
26 and a half years to come up with the deposit on Earth, not on Mars. Or 3, you go to get the co-equity product, you buy a house, you have 10 years to pay off the co-equity product, and you own a property. And then you just got to write a thank you card to 812.
To the real deal.
To the real deal.
That is
Maybe
the
a
real
bottle
deal.
of wine. That'd be nice too.
That's if Gary likes wine.
Do you like wine?
I don't drink.
No? Okay, so for Gary, a bottle of water.
And a box of chocolates.
And a
There
box
you
of
go.
chocolates. Gary, we appreciate you being on, man.
Yeah, I love
We're
being
so
here.
excited.
Thanks for having
We
me.
were jacked up for this product. It's been hard to keep on the hush hush, like even for our team, because you're
Yeah.
doing the thing on,
Yeah.
on Tuesday. So it's been hard to keep it on the hush, but we are so excited. And yeah, we appreciate it.
Yeah, thank you, Gary. Really
Yeah, no.
appreciate it.
And,
Game changer. Guys, check Gary Fooks out, CEO of 812 Mortgage.
Yeah.
812.mortgage, guys. Check him out. Check
It'll
his
be in the
team out.
description.
I'll be in the description.
And until next Friday,
This is the real deal.
the real deal. Bye.